When my daughter first asked me what to invest in, I almost launched into a full explanation of asset allocation, stock-to-bond ratios, annual rebalancing. Then I stopped, and I said, there is actually one fund that does all of that for you, automatically, every year, without you touching anything. She bought it that afternoon. Here's the thing about investment advice. Most of it assumes you want to become an investor, that you find this interesting, that you have time to research funds, allocate percentages, and rebalance every year. What if you do not? What if you just want to put money somewhere smart and not think about it again? What if one fund did everything automatically? That is not laziness. That is a completely legitimate approach to building wealth. And there is a product built specifically for exactly that person. It is called a target date fund. Here is what a target date fund does. You pick the year you plan to retire. That is the only decision you make. The fund then manages everything automatically. When you are young and have decades until retirement, it holds mostly stocks. High growth, high risk, appropriate for a long time horizon. Young equals mostly stocks. Close to retirement equals more bonds. As you get closer to retirement, the fund automatically shifts. More bonds, more stability, less volatility. Every single year, without you doing anything, the fund rebalances itself, adjusts the stock-to-bond ratio, diversifies across U.S. stocks, international stocks, and bonds. All automatic. Diversification, rebalancing, risk adjustment, all automatic. This is the 4 things that experienced investors spend significant time doing manually. The target date fund does all 4 without you knowing or caring. They have been told investing is complicated. They have been putting it off because they do not feel ready. And then they discover that one fund, bought once, manages their entire retirement portfolio. For decades, automatically. Ready is not a prerequisite. A brokerage account and 20 minutes is. Which funds to use? Here are the specific funds. At Fidelity, Fidelity Freedom Index Fund. Match the year to your retirement target. Planning to retire around 2055? Buy Fidelity Freedom Index 2055. Expense ratio, approximately 0.112%. Fidelity Freedom Index 2055, 0.112% fee. At Vanguard, Vanguard Target Retirement Fund. Same concept, expense ratio 0.08 to 0.15%. At Schwab, Schwab Target Date Index Fund. Expense ratio 0.08%. One critical word, index. Always choose the index version of a target date fund. Every major provider has 2 versions. The index version tracks the market passively. Low fee. The active management version charges significantly more, 0.50 to 0.75%. And research consistently shows it does not outperform the index version. Index version versus active version equals $64,000 difference over 25 years on a $500,000 portfolio over 25 years. The difference between the index version at 0.112% and the active version at 0.75% is approximately $64,000. For the same automatic management, 0 additional value. Always. Index version. The solo 401k connection. Here is the specific Freelancer application. When you open a solo 401k at Fidelity, which is free and takes 15 minutes, one of the first decisions is what to invest your contributions in. The correct starting answer for a beginner who wants 0 ongoing management. Pick the Fidelity Freedom Index Fund, matching your retirement year. Solo 401k plus target date fund equals complete hands-off portfolio. Set your automatic monthly contribution. Select the fund. Enable dividend reinvestment. That is your complete investment decision. Made once. As your knowledge grows, you can always switch to a different approach. But the target date fund is not a beginner training wheel. It is a legitimate permanent choice that many sophisticated investors keep for decades. Here is what this builds. A freelancer who contributes $1,000 per month to a solo 401k in a target date index fund from age 30 to 65. $1,000 month, ICE 35 years equals approximately 1.7 in at 7% average annual return, approximately $1.7 million. Management decisions made. 1. Pick the fund. Annual review time, 20 minutes. Check contributions are running. That is the entire active involvement required. Your action step this week. 1 action. Go to Fidelity.com. Open a free account if you do not have one. Search Fidelity Freedom Index. Find the year closest to your retirement target. Buy it. Set a recurring automatic monthly purchase. Enable dividend reinvestment. 20 minutes. Done. Runs for 35 years. Drop a comment. What year is your target retirement? Just the year. I will reply with the exact fund ticker to buy. If this made investing feel genuinely doable, tap the like. Subscribe now. Every new video, every Tuesday, Thursday, and Saturday. This channel is where I share real financial tips to help freelancers to build their financial wealth.